think? What are you paying when you, first of all, credit is basically someone's loaning you money in exchange for your promise to pay them back with interest, okay? We understand that concept, right? What do you think?
I always thought it was closer to 15 to 20.
15 to 20, what do you guys think?
It depends on credit.
Absolutely depends. However, average, if you get a Macy's card or, you know, Bloomingdale's, 23, 25%. Yes. Yes. Okay, huge. So high. People have no concept of how much money they're going to pay in interest when they buy that dress or that fancy watch they need. Okay? So let's just give you an example. You buy $500 of stuff. Okay? It's 22% interest on the credit card on that $500. It's going to cost you $110 in interest just in 1 year, okay, for 22%, okay? So it can really, and think about what happens, compounding of interest works the other way too. When you owe it, you don't want interest to compound, and that's what happens. The balance just keeps on growing and growing. So credit cards are convenient, right? I mean, it's much easier to swipe a plastic in the store than it is to worry about bringing cash and everything. So there are some pros to credit cards, but you have to understand the consequences of paying for something on a credit card if you don't have the money to pay off the credit card at the end of the month. Okay? Yes?
If you pay off the credit card bill right when it's due, you still pay 22%.
If you get your monthly statement and you pay it off right when it's due, do you still pay interest? No. That's the beauty of a credit card. If you can discipline yourself and use it purely for what it is, convenience, I pay everything on my credit card, and every month I pay off that balance, and I never pay $1 of interest. Yes?
Then sometimes we get like bonus points or like little, I don't know.
Absolutely. Other pros to credit cards, bonus points. You can get airline miles. Okay, if you're looking for a credit card, there are some things you want to consider. But if you don't fly a lot, do you want a credit card that gives you airline miles as a bonus? No, right? So you've got to think about yourself and what makes sense for you. Because there are people who have these fantastic credit cards that give them terrific miles, but they never fly. So it's not very helpful for them, okay? So a couple of things. If you look at page 44 in the booklet, there's a whole list of items, kind of the cost of using credit, okay? So the annual percentage rate is the first thing you want to look at. Basically what that is the interest rate, but it factors in all the fees and everything else that you're going to be paying. When you're comparing different credit cards, you're going to be looking at the APR. So if you have a choice between a card that has a 4% APR and a 10% APR, which one are you going to go for? Which one?
Wait, but it has to be fixed or?
Let's just assume 4% fixed rate
Okay.
versus a 10% fixed rate. Which one are you going to choose?
4.
Okay. Does it matter to everyone? What do you think? Does it matter to you what the interest rate is if you pay your credit card balance every month? No, right? But if sometimes you're not going to be able to, then absolutely it matters. What about if some credit cards charge an annual fee, right? So you may have to pay $50 just to have that credit card. So if you have a choice between a credit card that has a $50 annual fee and with a 2% interest rate, or no annual fee and a 20% interest rate, right? What do you think?
If you're going to pay off the balance, then just take the 20%. But you gotta
That's exactly right. You need to focus on your spending habits when you're looking at credit card offers. Because if you're just going to pay off the balance, you want to get the card with no annual fee, and the high interest rate doesn't bother you. Okay, you need to be careful because you need to know you're going to be able to pay off that balance and only purchase things on the cards that you're going to be able to pay for at the end of the month, right? But you definitely want to look at all of the various fees and the interest rate. You also want to look at the benefits, right? Like you mentioned, bonus points. Sometimes you can get a percentage of cash back, right? And for some people, that's great. That's what my credit card company does. They just pay me some cash back, a percentage of what I spend. Okay. The other thing that you'd mentioned is is it a fixed interest rate? So what if you know you're going to have to carry a balance? You're just not making enough money to cover your bills right now. You're going to have to use the credit card for a short period of time. And you see an offer for a 0% interest rate credit card.
For like 6 months or 3 months.
You need to recognize if it's what's called a teaser rate, meaning, yeah, it's 0% now for 3 months, and then it's going to jump up to 28%. So great, if you only need that debt for 3 months, that's perfect. But you have to be super careful that you understand exactly what that interest rate is going to be like for the term that you're actually carrying that debt. Okay? So you want to make sure that you're aware of that. What happens if your credit card is stolen? Someone charges $5,000 on it. What's your loss? But basically, you're limited to $50. Okay? That's the maximum loss you have, $50 on a credit card. If someone steals it and uses your credit card. You got to call your credit card company immediately, cancel the card, and that's the maximum loss you can incur. What is the difference between a debit card and a credit card? Yes?
Well, debit, it takes it like directly from your account, and it's not going to like put you into any debt. But with a debit card, you don't have like the extra bonuses.
Okay. Debit card takes it directly out of your account, and she said, and you don't have any debt. What's the problem, though? You need to have the money in your account to be able to use it, right? And there aren't typically the kinds of bonus points and everything else that you get with credit cards, which is a really good point. And for some people who have a little bit of a spending problem, and you know who you are, debit cards make sense, okay? Because it controls the amount that you spend to what you actually have. If you could just run up a credit card, there's going to be a credit limit, right? The credit card company is going to say the maximum that you can have is $2,000. That's the most you can spend. But you can spend that even if you don't have it. Yes? Did you have a question?
No, I think you're going to ask about the debit card.
Oh, okay. All right. Okay. So pros and cons of credit cards. Well, we've already talked about a lot of them. They're safe. They're convenient. It's an opportunity to build credit, which we're going to talk about as well. Quicker gratification. You can get something you want right away, even if you don't have the money. That's not necessarily good financially, but it is quick gratification. Special offers, bonuses. Okay, some cons. It can end up costing you a fortune in interest. Okay, if you charge items on a credit card that you can't afford and you can only pay the minimum payment for months and months on end, it can really cost you a fortune. So on page 52, there's just an example at the bottom. It says, did you know? You charge a $1,000 computer. Okay, I don't have $1,000, but I'm going to charge it. 18% interest rate. If you make minimum payments of $30 a month, because when you get a credit card bill, it's going to say minimum payment due, $30. You think, oh man, that's great. I bought a $1,000 item. I only have to pay $30? Sure. So you pay $30 every time you get your bill. It's going to take you almost 4 years to pay that off, and it's going to cost you almost $1,400. Okay, so when you're charging something, you want to think about, is this worth $1,400? Because I'm not paying $1,000 for it, I'm paying $1,400. I'm also going to be paying for it for 4 years before you do it if you don't have the money to buy it. Okay? Okay. The other thing about credit cards is that it impacts your credit record. Okay? When you apply for credit, so when you apply for a credit card, lenders are going to review your credit report. Okay, and basically your credit report is just your credit history. It's a record of all your personal financial transactions for about 7 to 10 years. Now at this point in your lives, you probably don't have any credit because you don't have credit cards, you don't have car loans, you don't not paying utility bills. But as soon as you start doing all those things, you're going to build what's called a credit record. Okay, and your credit record is incredibly important for a lot of reasons. Okay, number one, when you apply for a loan, the lender is going to look at your credit record to determine, number one, if they want to lend you money. Because what do you think they're going to think if they say, this person's declared bankruptcy, doesn't ever pay his bills on time, do I want to lend him money? Absolutely not. I don't want to deal with this person who's never going to pay me back, who's going to pay me late, right? Or if they choose to lend you money, what's that going to translate into? High interest rate. Absolutely. So if you have a bad credit record, and you want to get a mortgage, okay? Let me just give you some numbers. Let's say you're going to get a $300,000 mortgage, okay? And someone with a good credit, they're going to look at their credit and say they're a good borrower, I'm going to give them a good interest rate. So that bad credit just cost you $1.5 million. $1.5 I mean, it's tremendous, okay?